Hello, hello, hello. Welcome now, stock trades. Sorry about the cough. I'm going to try coughing out of here. So, I got the post COVID cough. Post COVID cough can last 6 months. So, yay for me. All right. So, in this video, we're going to talk about some really bad news here. I had this data, like I read it in the weekend, Friday, Saturday, and I was like, oh shit, right? And I haven't had, honestly, the time. I literally just got back home, right? I got back home at like 7 p.m., right? So in this video, we're going to go ahead and discuss some extremely bearish information that I get literally directly from a former hedge fund. And we're going to go in and essentially give you this information here. This is bearish. However, it is, and we'll give you some good insight on the goddamn market. Sorry about my throat here. So without further ado, let's go ahead and take a look here. So institutions are placing few net bets on a stock market rally. Okay. And if we were to look at this, we're literally hitting a low, the lowest since 2009. So essentially, the largest traders in the market bought to open the fewest equity call options relative to put options since 2009. So more people are betting against the market than with the market. Okay. And institutions are spending a lot on hedging. And it's unfortunate because I had this data like last week, and I just wish I went ahead and I looked into it. I was really busy at the hospital. But overall, institutions, we realize now they really are net negative. This is actually obviously I've never seen this before. I mean, just look at this. Like since 2000, we've never seen anything like this before. So larger trade, I put an explanation here to help you. Larger traders bought to open 1.1 billion worth of calls. That sounds good, right? But when you look at the massive 19 billion of put options for a net speculative volume of a negative $17.8 billion, obviously the market, with this information, many traders are speculating that definitely the market is going to get a little bit more bloody. Okay. Now, if you go ahead and look at the put call premium, okay. Now this looks at obviously all the puts and versus the calls. You can see that we're again at a record, again, not seen before. Okay. And if we go ahead and aggregate it with the S&P 500, we can see that we are in a record high. All right. Now, again, as you can see, whenever we were at a record high here, it could mean and it could signal a potential bottom. Okay. But I have some extra data that I was like, whoa, this is interesting. Okay. So this graph looks pretty cool, right? Let me explain it to you. Okay. This is this line is the S&P 500, obviously. This here in blue is corporate insider selling. Okay. So, and this doesn't apply to one particular stock. This takes the global S&P and looks at the average. Okay. Obviously, some stocks are different than others. Okay. But it says here, some smart money folks aren't getting rid of their shares. Okay. However, among all companies in the index, corporate insider selling has just increased from a record low at least over the past 12 years. Okay. I'm going to go ahead and say this again. Corporate insider selling has just increased from a record low at least over the past, 12 years. So as you can see here, let's just take a look at the most recent one. We saw an increase in corporate insider selling right around 2019 here. If you go all the way up, it literally predicted a future bottom, and all of a sudden, crash. Boom. Okay. So as you can see here, if you look at here, we are, again, I'm telling you this in advance. Okay. We may see this trend line continue up. And if that's the case, we may see potentially another crash. Again, this is an educational platform. We try to teach people. So obviously, no one knows what the future holds, but we like to use data and educate on the data because some folks just have Robinhood and that's all they use, right? So we want to go ahead and teach people to say, hey, there's other data out there. You can look at corporate insider sells and aggregate the data and do some analysis on it. All right. So that's interesting. Okay. In fact, a couple banks are issuing the fact that we could go down another 20% on the S&P. Okay. Now, interestingly, the S&P 500 energy after a percent oversold signal inputs, we get a rally in 3 months. So what this is saying is energy stocks, we may see them rally in the next 3 months. Okay. And what's, again, Russia, Ukraine, there's a lot of political, it's hard to, really grasp this type of, there's a lot of emotions in business. Okay. There's a lot of emotions. No, so this is not from the Bloomberg terminal. We get this directly from a former hedge fund. I think on average, institutions pay a lot more, but on average, if retail investors want access to this, it costs anywhere between about $300 to $500 per month, around that. All right. So overall, excuse me, Jesus. All right. So overall, we're looking like we're going to potentially get a 3 month. And by the way, you can use your own analysis too, and you can do your own research as well. All right. So we may see a rally, but what's interesting here, the reason why I'm talking about this is, well, could always be different this time. It is always could be. The energy sector typically provides positive returns in the first few months after the NDER declares a recession. And from a subsector perspective, integrated oil companies tend to perform the best. Okay. Again, trying to just teach you about what happened in the past. If people don't know what NBER means, it's just those are the folks that essentially declare a recession. Now, some of you, if you're in this camp, I'm in the camp, we think that we are already in a recession. Didn't we get negative 2/4 of GDP? My God, right? But they still haven't declared a recession yet. When they do, things are going to get funny. But a lot of people in our mastering have already been prepping for this recession. And we already are starting to see it hit. Like, for example, if you look at Tesla year to date, we are down 65% on Tesla. And literally within 1 day, we were down 8%. If you go ahead and take a look at the max here, Tesla is crashing. Tesla, we can do some technical analysis and do all of our AI technology to assist us, which we will. Just need to find the time. For all of our people on our stock alert and mastering, please do some due diligence and post it so I can see. I don't have the time right now. But as you can see, we don't know what the bottom is for Tesla, but I can tell you we're definitely going down. We're at $137 and we're getting at levels 500%. I have other stocks that have gone up more than Tesla. I mean, look, if you look at, let's say, Enphase over the past 5 years, Enphase has done 11,000%, right? So obviously, everyone's like Tesla. There's other stocks out there, but overall, we are starting to see year to date Tesla down 65%. If you look at now Clove year to date, it is down 76%. Literally 11% difference, not almost 11% difference from Tesla, right? So as you can see here, definitely we are, when a recession happens, all stocks are felt across the board, and the same emotions that a lot of the Clover community is facing is now going to be dispersed like a virus to all of investors from different stock groups. It already hit PayPal. Soon it'll hit Microsoft and Apple, right? But it's interesting because, we're starting to see a shift in dynamics. I'm seeing a lot of comments around Tesla. Clover and Tesla too. I've seen, this is a POS stock. Oh, I should have never bought. Oh, I wish I never should have. All these things. But guess what? Here's something that I know. At the end, retail will do what retail does. Retail will capitulate. That's what retail does. This is intrinsic to their DNA because, what do you expect when you have a certain percentage of the population having access to the stock market data? What do you expect when 89% of the stock market is controlled by the top 10% wealthy people? What do you expect? Of course they're going to lose. They don't have the resources, right? Which is why we designed this channel. Again, Everyone is a genius during a bull market, but when it comes to a bear market, um, the truth comes out, right? So, all right, let me just go ahead and take a look at the just quickly skim through these comments here if I see any questions here. Okay, I'm just going to push this here. Hold on. Exactly. If you do the Fibonacci sequence retracements, it'll definitely tell you the answer. Absolutely. It's right on time too. Absolutely. Sorry, I'm just reading the. Okay. All right. Well, that's all I have for you guys. I hope this was helpful. I hope this was an educational video. Comment down below what you guys think. And I'm sorry it's been a while since I've given you guys this type of data. It's just I just been really busy. Okay. All right. I will see you on the next one.